Hello, this is John Rosenau, Vice President and Chief Operating Officer of MONECO Advisors in Fairfield, Connecticut. Welcome back. We're going to provide you with a market update for the month of January 2017. Please stay tuned at the end of this video for a required disclosure statement. Well, in the month of January, we saw the three major domestic indexes reach record highs, and the Dow surpassed 20,000 points for the first time ever. This is a much different start compared to where we were this time last year. In January 2016, the markets were in a slide and filled with volatility. In fact, fears about China's economy contributed to the S&P 500 and Dow experiencing their worst five-day beginning of a year. This past January, we also learned that personal income increased by 0.3% in December and slightly below expectations, but enough to push income up 3.5% for all of 2016. Retail sales increased by 0.6% for December, ending up 4.1% for last year. Right now, we're also well into corporate earnings season, and many reports are beating expectations. As of January 31, blended earnings were up 7.1% for the fourth quarter, and revenue increased approximately 4.2%. Well, despite this positive data, the economy still has opportunities to improve, and in January we learned the gross domestic product, or GDP, lagged in the fourth quarter of 2016, showing 1.9% growth compared to the third quarter's 3.5%. By this estimate, GDP increased a total of 1.6 throughout 2016. If you look more deeply at the numbers, however, you'll see many of aspects of our economy in the fourth quarter are growing, including household purchases, business equipment spending, and inventory accumulation. Instead of the lagging numbers showing a widespread slowdown, one area is largely responsible for decreasing growth: net exports. In the fourth quarter, we saw a jump in imports and a decline in exports, which combined to pull down growth by 1.7%, the biggest drag since 2010. Trade is an incredibly important part of our economy, as most recent data GDP shows any change in balance between imports and exports can affect growth. In fact, without the decline in net exports, fourth quarter GDP could have beaten third quarter measures. And as you're surely aware, we're currently in the middle of a hotly debated, headline-grabbing political environment, and some of the key conversations do impact trade, from the taxing of Mexican imports to restricting visitors from certain countries. These new policies and the reactions from the nations they affect could change the balance between American imports and exports, and thus our economy. Of course, we're not political prognosticators, we're financial professionals. So while we continue to closely watch new policy developments, our focus remains on market fundamentals. Throughout 2017, we will analyze the economy's underlying health and strive to find new ways to pursue your goals in a changing environment. As always, we're here to help you and understand what's happening, no matter the headlines. Well, that's it for this month's Educational Economic Update. Thank you for watching, and we invite you back next month for another market update. Take care. While we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or a solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decision. Investing involves risk, including the potential loss of principal. No investment strategy can guarantee a profit or protect against loss in periods of declining markets. The indices mentioned are unmanaged and cannot be invested into directly. Past performance does not guarantee future results.